question that comes to mind is what is the type of business that that one going to start? So there are different types of businesses. Broadly, you can classify it into three types of businesses, namely service organizations, manufacturing concerns, and trading concerns. These are the three broad categories of business that you can do as an entrepreneur. The next question that comes to mind after deciding what is the type of business that you're going to do comes the type of business organization that you are going to do. Name any business that you take. Example, manufacturing of toys. Take that as an example. So manufacturing of toys is a type of business that you're going to do. So that falls under the category manufacturing sector. So once you have decided what type of business you're going to do, the next comes what type of business organization that you're going to do to manufacture a toy. Now, quickly, let us look into what are the different types of business organizations that are available. The most popular forms of business organization can be broadly classified into these three heads. One is organization with unlimited liability, organizations with limited liability, organizations for social activities. What is this organization with limited liability? Let me explain you in the next slide. So first we'll understand what are the different types of organization. Under the organization with unlimited liability, first comes the sole proprietorship organization, then Hindu undivided family partnership firm. So these are all the three different types of organizations that falls under the category organization with unlimited liability. The next comes organizations with limited liability. Organizations with limited liability has two segments. One is company and one is limited liability partnership. The third one is organization for social activities. Under this categories, Section 8 company, trust and society are the different forms of organizations that can be done. Now, what is this unlimited liability? What is this limited liability? Obviously, people will know what is the organization for.
Ramesh Garu, just a second,
Yes.
Participants, yeah. So a little introduction about today's session. So today, Ramesh Garu is going to give you the types of businesses and the legal entities. Okay, how to register the legal entities, so that whatever the notes or the slides he is showing, they are very, very informative. Kindly make a note of each and every point so that you can guide your student entrepreneurs in near future. Okay, so this information you won't get in any websites. Okay, so all the information shared by Ramesh Garu, so it is on experience. Okay, so there are a lot of things so where this Ministry of Corporate Affairs don't give you. Okay, so such information, I think with Ramesh Garu experience, he will be giving to you. Kindly make a note of each and every point he is telling. So I request everyone to come up with notebooks and pens to note down the points. Okay, thank you very much. Sorry to interrupt, Ramesh.
No, no issues, sir. Thank you. Yeah, that brief introduction is required for the basic understanding of the points that we are going to discuss here. And for everyone's good note, I'll also be sharing this PPT with the AAC SKU team, so that you can also refer this after the session. And if in case of any queries, you can just get back to the AAC SKU, so that they will also be in touch with me and explain you all the queries. Yeah, so let me explain you what is this unlimited liability and limited liability. Limited liability means the liability of the person running the business is limited to the extent of capital that they have invested. For example, we are starting a toy manufacturing company. So there is a capital that is required for this business. Assume it is to be 1 lakh. So in case of a limited liability organization, which is a company and a limited liability partnership, if in case business doesn't go well, or you are not able to catch up with the market commitments, the loss that you will be making maximum will be limited to the amount of capital that you have invested, say 1 lakh rupees. But whereas in case of an unlimited liability, which is categorized as sole proprietorship concern, HUF and a partnership firm, your liability is not limited only to the amount of capital that you have invested, but it it also extends to your personal assets. Suppose example, you have invested 1 lakh rupees. So with that, you manufacture a toy and you are selling in the market. Assume the market doesn't go well and you have made a loss of 10 lakh, 5 lakh rupees or 10 lakh rupees. In that case, here your capital will be 1 lakh rupees. But in case of an limited liability, even though your losses is 10 lakh rupees, but you are liable only to the extent of 1 lakh rupees of your capital. But in case of an unlimited liability or type of organizations, since your capital is 1 lakh rupees, the balance 9 lakh rupees of your losses are to be met with your personal assets. Personal assets means your house, your fixed deposits, so things like that. So this is the basic thing one should decide upon. First is what is the type of business that we are going to do. Second one is what is the type of organizations that we are going to do to perform that business. Now, out of these type of organizations, what we have discussed in the previous session, previous slides, we are now going to discuss only about the company form of organizations. Okay, so company is a name word to everyone. What is a company? People call different businesses as company, but it is not so. People call X and company, Y and company, but how you will identify any business organization as a company? Example, Reliance Industries Limited. Reliance Industries Limited is a company. How will you identify using that name? That Reliance Industries Limited is a company. Here in India, any company, the name of the company will be ending with the letter one person, OPC Private Limited or Limited. So example, Mr. X and Company. So it is not a company. When you hear the name, it is not a company, but X OPC Private Limited, X Private Limited, X Limited. So when these names are ending with these letters, it is a company. It is a registered company. Only in India, we call those as a companies, and not just, there are few organizations where their name will end with the word uncompany, X and company, Y and company. That is not a company we are talking about. We are talking about only those companies which has in its name OPC Private Limited or Limited. Example, Reliance Industries Limited. Reliance Industries Limited. Here the company names ends with the word limited. So it is a company. So let me give you a quick insight for company form of organization. So what is a company? So this is a definition which is given under the Companies Act 2013. That is the act which governs this form of organization. That is, it falls under limited liability. Now we are talking under that limited liability, we are talking about company form of organization. So what is a company? Company means a company incorporated under this act or any other previous law. That means any form of organization that is going and registered under this act only is called as a company in this entire discussion. Okay, therefore, to form a company, registration is mandatory as per the act. So any company cannot be formed without any registration. So now registration means the next question comes, what is the act that governs the companies in India? So at present, the Companies Act 2013 governs the company form of organization. What is the name of authority regulating these companies? Like for example, for power, there is a separate ministry. For information technology, there is a separate ministry. For companies, it is called as Ministry of Corporate Affairs. So Ministry of Corporate Affairs is the authority under which we will be regulated. And the name of the act is Companies Act 2013. So, okay, what is the main feature of a company? The main feature of a company means it has a separate legal entity. That means what is the separate legal entity? Separate legal entity means the owner of the business and the business are two different entities. Example, Reliance Industries promoter, Mr. Ambani, and Reliance Industries, both are different. Even though Mr. Ambani has invested and holds a major stake in Reliance Industries, Reliance Industries itself is a different entity and Mr. Ambani itself is a different entity, which is not so in the case of a proprietorship organization. Example, a provision store near your house named X provision store, Y provision store. That would maximum be a proprietorship form of organization wherein he and the business are one and the same. So there will be no separate PAN for proprietorship form of organization, But in case of a company has a different PAN, so that it is identified as a separate legal entity. What is the benefit of the separate legal entity? That means all the bills, name boards, any law for the company, any law against the company, everything will be done only under the name of the company, not under the name of the shareholders or directors who are part of the company. So that is the main unique feature of a company. Okay, so let me quickly go through some of the important key definitions before understanding and going through the incorporation procedure of a company. So first, we have discussed about what is a company, what is the act, and what is the regulator under which the company is regulated. Now, for a company, you call them as a director. Who is a director? A director is a person responsible for the management of the company. Example, take Reliance Industries. Reliance Industries has finance director, operations director, sales director, purchase director. So they are the directors who are responsible for the management of the company. So what level in management they hold is that first will be the owners of the company, shareholders and promoters of the company. The next will be the directors of the company. So directors will be the board, will forming the board in a company, and under them managers, then line staff, then day-to-day staffs will be operating under them. So all decision-making authorities are done by the director. Then what is called DIN, Director Identification Number. It is to be obtained from the Ministry of Corporate Affairs of India to become a director in a company. So what is the basic criteria for becoming a director in a company is that they should be holding a director identification number. Only then they can become a director in a company. What is the role of a director? He will be responsible for the management of the company. Then what is the next point is digital signature certificate. Digital signature certificate is nothing but the electronic pen drive, wherein company form of organizations will be filing various forms with the Ministry of Corporate Affairs of India on periodical basis. And also during the incorporation, all the forms are completely electronic mode. There's no physical mode, either for incorporation or for post-incorporation compliances. Everything is electronically made. So for electronic forms, there is a separate signature called digital signature. So that is this signature. What is a shareholder? Shareholder means the owner of the shares in the company. That means the person who's investing in the company will be called as the shareholder. Now we'll be having a question. Who's the director and who's a shareholder? A shareholder can be a director or he cannot be a director. All these questions will definitely pop up into our mind. So let me answer all these queries. A shareholder, I told you, I explained you, right? There are three forms of organization. One is one-person company, one is private limited company, and one is public company. In one-person company and in private company, the shareholders and directors mostly will be one and the same. That means what difference it makes is that I already told you, right? The owners of the company and the company will be different as it has a separate legal entity. So if I am investing in Reliance Industries shares, I will be called as a shareholder. But the person who is managing the company will be called as the director. Example, Ambani. But here in this case, Ambani, Mr. Ambani is a director as well as the shareholder in a company. So he holds a share in a company as well as he manages the affairs of the company. The next one is share capital. The part of the share capital of a company that comes from shares, raising of shares. That means investment, simple, to call it in a simple language, the type of organizations you're going to select will need an investment. So that investment is basically called as capital. But in Companies Act terms, it is called as share capital. That means you are investing some money as a capital. So against that, the company will give you a certificate called as share certificate. That means it is a proof of ownership mentioning the amount, the number of shares that you're holding in that company. Next one is share. What is share? The capital of a company is raised by way of issuing shares. It is a document which gives the holder certain rights in a company. What is the certain rights? That means you have a right of voting in any meetings of the company. Suppose Reliance Industries holds a meeting every year wherein they declare the financial results. So in that meeting, you have a right to vote. That means each shareholder, one share, one vote is the concept here. So you can appoint a director, you can remove a director, you can appoint an auditor, you can remove an auditor. So all these decisions that is happening in a meeting in a company, shareholders are the only person who have the right to vote for or against any decisions that is being taken in the company. The promoter, the person who initially forms a company before the directors are appointed by the shareholders of the company. That means the initial idea, the person who has an initial idea of forming a company is called as a promoter. Then now we discuss into what is a public company. A company which offers its shares for general public. That means, example, Reliance Industries. Reliance Industries is a public company. How to find whether it is a public company? Reliance Industries Limited. So the name of the company ends with the word limited. So it is called as a public company. So what is the main feature of a public company is that the public company can get money from the public, general public, but company itself can get money from public means no, because only public company can raise money from the public. The next form of organization is the private company. So this is what I told you, right? So a private in a private company, the shares cannot be taken from the public. Then who will be the shareholders in this company? Means the promoter, mostly the promoter or the promoter's relatives and friends. Only close circle people can invest in a private limited company. Okay. The third form of organization is a foreign company. A foreign company is a company or body corporate incorporated outside India. So that means it is not incorporated under the Companies Act 2013. So that means, example, a company incorporated in UK. So in like a Companies Act in India, there is also a Companies Act in UK, United Kingdom. So a company which is registered or incorporated under the UK Act. Okay, so that type of company we are talking about here. So it has to satisfy two conditions: a company incorporated outside India, which has a place of business in India, whether by itself or through an agent or through electronic mode. So it should have a place of, it should be incorporated outside India. It should have a place of business in India, either by its own. That means it has a branch office in India, or it has appointed an agent to carry on the business operation in India, or it has no physical existence, or it has not appointed an agent, but it is operating through electronic mode. So that is one of the basic conditions for being a foreign company. The next one is conducts any business activity in India in any other manner. So it is not only sufficient that it has an office in India, it also should conduct business in India. So if these two conditions are satisfied, then it is called as a foreign company. In order to be considered as a foreign company, one has to fulfill both the above mentioned criteria. Okay, so these are all general points. The forms of income the shareholder gets in a company is by way of dividend and capital gain. So a person is investing in a company. So what is the return the shareholder will be getting from the company is the question here. So there are two forms of income. One is dividend and one is capital gain. Dividend is nothing but a periodical income declared by the company out of the profits. Example, people would have heard in the news that Reliance Industries has paid 2 rupees as dividend. So that means out at the year end, Reliance Industries will consolidate the profit for the year. So out of that profit, they will decide that this much amount of profit will be distributed to the shareholders of the company as a return for their investment. So that is the part of the income that is given to the shareholders is called as dividend. And what is the capital gain? Capital gain is very simple. Capital gain is the difference between the sale price and the purchase price of the shares. Suppose initially you have invested in a company, a share may be of 1 rupee, 10 rupee each. So you have purchased a share for 10 rupees in Reliance Industries. After 6 or 7 years, the company grows. And in the public, the people are ready to take that share for 2,000 rupees. So the difference between the sale price 2,000 rupees and the purchase price 10 rupees will be called as a capital gain. So these two types of income will be occurring for the shareholder. Next one is, as I already told you, the important decisions in the company are taken by way of company meetings and passing resolution. And the resolutions may be of two types, ordinary or special resolutions. So who will be taking these important decisions? The important decisions will be initiated by the directors, because they are the management people. So management people knows that, for example, they are taking a decision to start a new production in Andhra Pradesh. Already they are existing in Tamil Nadu. They wanted to start a new factory in Andhra Pradesh. So this is a business decision. So this business decisions will be initiated by the director. But who will be approving this decision? Shareholders, because they are the owners of the company. They will be approving this decision. So for taking these decisions, a meeting will be conducted. In that meeting, whatever decisions are taken will be categorized as two basic things. One is ordinary resolution and one is special resolution. What is this ordinary resolution and what is the special resolution is that ordinary resolution means if any action is put forth for voting for the shareholders. Example here, starting a new plant in Andhra Pradesh. So for starting a new plant in Andhra Pradesh is a decision for which if 50%, more than 50% of the shareholders agree for this decision, then this decision can be implemented. So this case is called as an ordinary resolution. Ordinary resolution means any decision which, if approved by more than 50% of the shareholders of the company, then that decision will be implemented. So this situation is called as an ordinary resolution. What is special resolution? Special resolution means more than 75% of the shareholders have been voted in favor of the decision. So in that case, it is called as a special resolution. And so that is an ordinary resolution refers to resolution passed by the members of the company by bare majority. Bare majority means out of 100%, more than 50% have voted for the resolution. That is called as ordinary resolution. A special resolution, on the other hand, is the resolution that is affirmed by the members of the company by 3/4 of the majority. The company can be of two types, namely with share capital and without share capital. So what is it? Right from the beginning, we are talking about share capital, but a company can be incorporated without having a share capital. What is the type of company that can be incorporated without having a share capital? Is Section 8 company. What is a Section 8 company? Section 8 company is formed for doing any social activity. Okay, for doing social activity, we need some amount of investment, without which any business cannot be run, right? So instead of having a share capital, here the company obtains the donations from the public, and that donations are used for the promoting the activities of the company. Okay, so now we'll have a brief look about the various points of the company. Here's a quick look into the legal implications for companies. Okay, first one is what is the registering authority? It has to be registered with the Ministry of Corporate Affairs under the Companies Act 2013. Okay, what is the legal status? Legal status is it has a separate legal entity. The promoters of the company are not personally liable towards the company, because promoters and the company are different. Then what is the members' liability? As it is a limited liability form of organization, it is only to the extent of the share capital. Okay, what is the minimum number of members required to form a company? Minimum number of persons required to form a company is 1. That means in case of 1-person company, the minimum number of persons required is 1. In case of a private limited company, the minimum number of persons required is 2. And in case of a public limited company, the minimum number of members required is 7. Okay, then transferability. Whether can we transfer the shares that we are having in the company? Ownership can be transferred by means of share transfer. Then taxation. What is the tax rate? So any company, be it a private limited company or any form of organization, those are taxed as per the slab rates prescribed under the Income Tax Act. Currently, there are 3 different slab rates for an Indian company, except for a foreign company. There are 3 types of slabs for an Indian company. One is 20%, one is 25%, and one is 30%. There are different types of conditions to be fulfilled for availing the 20% and 25% of tax rate. For normal companies, it is 30% is the tax rate at present. Then what is the annual statutory meeting? That is called as board meeting and general meeting. Board meeting means we know what is the board of the company. Board means the directors of the company. So board of directors meeting. So initially they will have a meeting and decide that we are going to expand to Andhra Pradesh, expand our company to Andhra Pradesh. So initially they will decide, and then they will initiate and put it for to vote to the shareholders. So that meeting is called as a general meeting. So there are two types of meeting. One is board meeting, wherein the directors will be deciding, taking any decision, and the second one is the general meeting, wherein the shareholders will be voting and deciding any transaction that is put forward. Then what is annual filing? It must file annual statement of returns and solvency with the registrar every year. That means in company form of organizations at the year end, as usual, apart from filing an income tax return for your business, there are additional compliances if you are forming a company. So that is, you need to file your balance sheet, income and expenditure account, and the number of meetings you have conducted during the year, then change in the directors, change in the shareholders, transfer of shares that has occurred during the year. So all these activities, all these special activities that is happening in the company should be intimated to the Ministry of Corporate Affairs. So that is this annual filing. Then existence or survivability. That means in a proprietary form of organization, example, a provision shop near you, a person named X owns a provision shop near you. So if he expires and he doesn't have any legal heirs, then that business comes to an end virtually. But in the company form of organizations, if the shareholders expires, or if the directors expires, the company goes on forever. That means you can just replace the directors by removing the expired directors and appointing a new directors. And in case of shareholders, the shares can be transferred to the legal heirs, or the shares can be transferred to any third person for consideration. But the company goes on forever until the members and the directors, they themselves pass a resolution that the company should be closed. Until that, or the court decides that this company should not be performed. So only under these situations, the company will come to an end. So any person coming in, any person going out, there's a famous say in English: men may come and men may go, but the company goes on forever. That means the persons may change, directors may change, shareholders may change in a company, but the company goes on forever. And what is this foreign ownership? Foreigners are allowed to invest with or without the permission of the RBI and other applicable permissions for the relevant government of India authorities. That means, so a person who residing in foreigner wants to invest in Reliance Industries. So whether that is permitted or not, for that there is a separate RBI regulation which regulates and restricts foreign investment. What is the type of foreign investment you can make? What are the type of companies you can make per annum? What is the extent of investment that a foreigner can make in a company in India? So all those things are regulated by the RBI and Government of India from time to time. Okay. These things in mind, let us now go through the incorporation procedure for a company. So before proceeding further, let me pause here and ask you a question. If leave it to the forum that if there is any question, you can raise till whatever we have discussed here.
Also, you can use the chat box. Okay.
Yes.
You can type in the chat box if you have any questions.
Okay. Anyway, at the end of the session, I will be giving 10 minutes for every session.
Better we will take the questions at the end of the session. Okay.
Sure. Okay. So let me proceed further. So now we are going to discuss about the incorporation procedure. So we have understood the different types of organizations, and we have fixed a type of organization as a company. So under the company, what are the key terms that are used in a company? So what is the different types of companies? So what is the unique features of forming as a company? So all those things we have discussed. So next step will be how to incorporate a company. What are the documents required? What are the requirements? What are the other requirements? And what will be required along with the incorporation of a company? So all these things we are going to discuss in detail one by one. Okay. The first step in incorporating a company is obtaining the name approval. Okay, what is this obtaining the name approval? In other forms of organizations, whatever name you require can be used. But in the company form of organizations, you cannot use any name. Which means that the name should be the name what you're selecting for your company should be unique, and that name should not have a trademark registered by any other person. So what is this? Suppose we are incorporating a company now. So we are keeping a name as X and Y Private Limited. So now what is the next step is, we have to check in the Ministry of Corporate Affairs whether there is already an existing company in the exact X and Y Private Limited, or in any other resemblances are there. That means even if the pronunciation is same also, the company name, whatever you have selected, will not be allotted by the Ministry of Corporate Affairs. So this is the key step. This is the key step in incorporating a company, selection of name. So before deciding, so we need to decide a name, and we need to check in the Ministry of Corporate Affairs website whether this name is already registered by any other company. If it is already registered by any other company, or any other company has registered a trademark. What is a trademark means? It is a different concept wherein for your business, you are selecting a unique name or logo. That logo can be registered and taken as a trademark. So what is the benefit of getting a trademark is that your logo or your business name cannot be used by any other person without your permission for a certain specific period for which you have registered in a trademark. So these two things should not be there. It should not be the name of an existing company, and it should not be a name for which any other person has already taken a trademark. So this is the first step. Second step is brief objects of the proposed company. That means, as we have already discussed, we are going to manufacture a toy. So here, manufacturing of toys, and then somewhat value addition, whether in India, only in India, or outside India. That means we are going to export, or we are going to do only in India, and only manufacturing, or along with manufacturing, going to do trading of these toys, and only manufacturing and trading of these toys, or any other value addition, or any other R&D that we are going to do. So all those things we need to give a brief objects at the time of name approval. And next one is, if the proposed name is already registered under trademark. Suppose you have not incorporated a company, but you already have an idea that this should be your company name and this should be your company logo. So before registering under the Companies Act 2013, you can first go and register, get a trademark for that name and logo, and then after getting the trademark and logo, you can apply for the name approval. So that, because if you are getting an innovative idea, so within the short span of time within which you are going to incorporate your company, if any other person comes to know about this idea and they go and register as a company, or they get a trademark for this, then you will not be able to use that. So first you can register as a trademark for your company's name or the logo, and then you can incorporate a company. Suppose if before incorporating a company, you have already got a trademark for that name and logo, then you can attach that trademark certificate along with the name approval form, so that you will be allotted the specific name. The next one is filing of incorporation documents with the Register of Companies. So first you will be applying for name, whatever desired name you are getting, so that you're going to apply. So if all these criteria, that means that name should not be having a trademark and the name is unique. If that is the case, then you will be given an approval letter stating that the X and Y Private Limited name is available. You have to file all the incorporation documents within a certain period. So like that, an approval letter will be given by the Ministry of Corporate Affairs. So within that period, whatever the period that is mentioned in the certificate of in the name approval letter, so within that period you have to file the documents that we are going to discuss. So this is the next step. So these documents and details you should get ready with once we have obtained the name. So we'll discuss in detail one by one. So these things includes obtaining director identification number of all the proposed directors of the company. So we know what is director identification number. So that is the number like PAN. So how we are getting a PAN? So like that, we need to apply and get a director identification number. So only if you have a director identification number, you can become a director in a company. So first step is to obtain director identification number of all the proposed directors of the company. Okay, at the incorporation, there will be two persons. One is directors and one is shareholders. For shareholders, there's no such requirement that they should be holding a director identification number. Only persons who are going to become a director in a company at the time of incorporation or even after incorporation, they should be possessing a director identification number. The unique feature about incorporating a company in India at present is that along with the incorporation form itself, director identification number is allotted by the Ministry of Corporate Affairs. That means it is not required that you need to apply DIN separately, and after applying DIN, you need to incorporate a company. Now, what is the situation? What is the present situation is that along with the company incorporation, there is another application wherein you can apply DIN and GIN. So now the procedure is very simple. For example, you are already a director in any other company, and now you are going to incorporate a company on your own. So the next question comes is whether that director identification number can be used in this company for becoming a director. The answer is yes, because director identification number is a unique number allotted only once, and it has a validity till the lifetime of the person. So if you have obtained director identification in one company, using that director identification number, you can become director in any number of companies by disclosing the director identification number to that company. The next one is fixing the authorized share capital. Here, there are two terms. One is authorized share capital and another one is paid up share capital. That means we understood what is capital and what is share capital. Now, what is this authorized share capital and paid up share capital? Authorized share capital is the capital that the company will invest in its lifetime. The paid up share capital means the capital that the company is going to invest at present. That means, suppose we are incorporating X and Y Private Limited. So X and Y Private Limited, assuming that in a 5-year or 10-year period of time, the company requires an investment of 15 lakhs rupees in its lifetime. But out of that, immediately the company requires initially only 1 lakh investment. So here that 15 lakh, whatever we have projected over a 10-year or 15-year period of time, that investment is called as the authorized share capital of the company. So that is the maximum amount of investment that the person can invest in a company. The paid up share capital means the 1 lakh what we are going to invest in present, because the company is a startup company. So initial 1 lakh investment is required for purchasing a plant and machinery, then for purchasing raw materials, then for giving rent, salary. So all these things we will be requiring some working capital. So that working capital is called as the paid up share capital of the company. The next question comes as, okay, so I have fixed an authorized share capital of 15 lakh as of now. So after 5 years, I need an investment of 1 crore rupees. Whether this 15 lakhs can be altered to 1 crore rupees? The answer is yes, by filing a simple form. There is a separate form for which we need to file and pay a nominal fee as a stamp duty to the government, and then we can increase the authorized share capital of 15 lakh to 1 crore. The next comes is whether that 1 lakh investment, whatever you have made as a paid up share capital, whether that can be increased to the maximum amount. The answer is yes. But before increasing that also, we need to file a specific form with the ROC, wherein we are informing them that these are the persons who are going to invest the additional amount into the company, and this is the additional amounts. For example, initially you have invested 1 lakh rupees, you want to increase that to 2 lakh rupees. So the differential 1 lakh rupees, you need to identify who are the persons who are going to subscribe the shares, and that breakup, along with that breakup, you need to file a form with the Ministry of Corporate Affairs stating that you're going to increase the paid up share capital. So the key takeaways from this discussion is that authorized share capital and paid up share capital both can be increased. But at the time of incorporation, you should have a forecast and you should mention a certain type of amount in the form, so that later on you can, if your forecast doesn't go, you can still increase or decrease the amount of share capital. The fourth one is complete registered office address. That means the place which you are going to declare as a registered office of the company. Here, what is this registered office? We call it as place of business in some type of business, but here we are calling it as registered office of the company. For example, our X and Y Private Limited is going to be incorporated in Andhra Pradesh. So in Andhra Pradesh, we are going to have 4 different offices. One is godown, one is manufacturing area, and one is the registered office wherein we'll be getting all the documents, and one is the place of conducting the meetings. So we are having four different places for our business. Out of the 4 different places for our business, we need to declare to the Ministry of Corporate Affairs that out of these 4 offices, this is any one will be my registered office. That means any communications that is coming to the company will be delivered to this address. And in case of inspection by the Ministry of Corporate Affairs authorities, this is the place where they will be conducting the inspection. So out of these 4 different places of locations which you have identified to do business in Andhra Pradesh, one of the address you should give it as a registered office address. So registered office address, what is the importance is that is the place where all the communications by the Ministry of Corporate Affairs will be done to this address. Authorities inspecting the company will be coming to this address. And the more important thing is the books of accounts, a copy of the books of accounts of the company, and all the registers, different registers like register of directors, register of members, register of meetings, register of loans. So all these registers should be kept in that place. So if any authorities or any shareholder or any director wants to inspect those registers, so this is the place for which they will be coming for inspection. So that is the key takeaway from the word register office address. So now we are going to fix one of the places as the register office. So next comes register office address proof. That means the Ministry of Corporate Affairs has identified only these bills, these utility bills will be taken as a proof of the registered office of the company. This registered office, what are we going to declare? That building or land may be in my own, or maybe I have taken it for a lease or rent. So if it is in my own name, then there is no rental agreement required. There is only a letter stating that I am the owner of the property. So I am going to incorporate a company in this property. So I do not have any objection in housing the registered office of the company. So like that, a simple letter along with the proof, along with the any one of these utility bill, like electricity bill, telephone bill, mobile bill receipt, and it should not be older than 2 months. That means we are in the month of May. Suppose if you are going to incorporate a company in May, the utility bills can be maximum to March, 2 months older, April and March. So any utility bills falling within this 2 months period prior to this May can be taken. So that proof can only be either an electricity bill or telephone bill or mobile bill. So it should be in the name of the owner. So if it is not owned by us, then the name in the name of the owner will be making a rental agreement and a no objection certificate. We'll be getting these 2 documents additionally from the owner of the property if it is not owned by us. The next one is ID proof and address proof of all the promoters. Here, since the company is not yet incorporated, I am calling them as promoters, or else we can term them as the proposed shareholders of the company. So for them, whoever is going to become a shareholder in a company, these 2 basic documents are required. One is PAN and another one is Aadhaar. So a copy of the PAN card and Aadhaar card of all the promoters of the company is required for incorporation. So a person who doesn't have a PAN or Aadhaar cannot become a shareholder in a company. So these 2 documents are basic documents. And next one is digital signature certificate of all the directors and subscribers of the company. So since I already told you that all the incorporation forms are done electronically, we need this digital signature certificate. This digital signature certificate, there are vendors in the market who can source this DSC. The next one is the following documents are required if the promoters do not possess the valid director identification number. As I already told you, if the directors already have a director identification number, so that can be given. If they don't have a director identification number, I already told you that there's a separate form along with the incorporation wherein the proposed directors can obtain a director identification number. So for getting that DIN number, we need the following proof. Any one of the following ID proof. That means apart from PAN card and Aadhaar card that we have discussed already, these are all the additional proof that we need to give to obtain the director identification number. The first one is voter ID or driving license or passport. All these documents, especially the passport and driving license, should not be expired. Voter ID, there's no expiry, but for driving license and passport, it should be live. So out of any of these three ID proofs, one of the ID proofs should be necessarily provided for all the persons who doesn't have a DIN and who wants to become a director in the proposed company. The next one is any of the following address proof: bank statement, telephone bill, mobile bill, electricity bill. All these things should be in the name of the person who is going to become a director. So any one of these 4 documents is required as an address proof, and all these 4 documents should not be older than 2 months, as usually I told you. Okay. ID and address proof of all the promoters. This is usually PAN card and Aadhaar card. And the additional detail that is required is place of birth and duration of stay at present residential address of the proposed directors. So this is just an information wherein we need to key in the incorporation form what is the place of birth of all the directors of the company and what is the duration of stay at present residential address. For present residential address, we have already given any of these 3 proofs. That is bank statement, telephone bill, mobile bill, electricity bill. So whatever address is available in these documents, in any one of these documents, will be taken as the present residential address of the company. So here you need to just key in the duration of stay at present residential address of the proposed directors. So just in terms of years and months, approximately 10 years, 5 months, 4 years, 3 months, like that, approximately we need to key in along with the place of birth. So for place of birth, what all information we need to mention is the district and state in which you are born, and then mobile number and email ID for the company. That means apart from the email ID of the directors and subscribers, for company there will be we need to assign a separate mobile number and email ID. It may be one of the directors' email ID and mobile number also, or there may be a separate mobile number and email ID. What is this key requirement of this separate mobile number and email ID for companies? That after incorporation, all the incorporation documents, approval, PAN, everything will be delivered only to this mobile number and email ID. And one more thing is the email ID what you're giving for the company at the time of incorporation will be displayed in the website of the Ministry of Corporate Affairs of India, so that wherein you can go and search any company's name. Namely, if you go and search Reliance Industries Limited, there will be a email ID in the website. So if there are any business proposals for the company which we are going to give, so and any vendors like legal vendors, accounting vendors, then purchase vendors, all those vendors will be contacting to this email ID. So that is the key takeaway of this mobile number and email ID for the company. Additionally, these are the following information that is required for all the promoters. That means these are also there is no proof required for all these informations. We need to just key in all this information in the incorporation form. That is, first one is the educational qualification. That means it will not be asking a detailed educational qualification. It will be just asking whether they are SSLC passed, or they are bachelor degree passed, they are master degree passed, or whether they hold any PhD. So only this type of information will be asked, and not the specific degree like BCom, BSc, BE, like that. No specific degree will be asked. And next one is the occupation. Occupation is the present occupation. Suppose you are an employee in another company, then you can mention that as a employment, or you can also mention the designation, manager, or something like that. Or you are not into employment, but you are already doing a business, and then you can mention here as self-employed hyphen business. Or you can also mention what type of business, agri or something like that, already have some business, like that you can mention. And then is the email ID and mobile number. First we discussed about the email ID and mobile number for the company. Here we are talking about email ID and mobile number of the directors, subscribers, and promoters. Whatever the promoters may become the directors and the shareholders of the company, or they will be only the directors and acquiring investment from the public. So in all these situations, we'll be obtaining the email ID and mobile number of the company. So what is the importance of email ID and mobile number of the promoters is that, as I already told you, if they are not having director identification number at the time of incorporation, we are applying for director identification number. So that director identification number allotment letter will be flowing only to the respective email ID and mobile number given by the directors at the time of incorporation. Okay. So the note here is all the above mentioned details and proofs are mandatory for company incorporation, and even without one of the proofs or details, a company cannot be incorporated. That means we discussed about the mobile number and email ID for the company, mobile number and email ID for the directors and promoters, then identity proof of directors and subscribers, PAN and Aadhaar, driving license, voter ID or passport, then mobile bill or electricity bill, or any other utility bill. So all these documents, whatever we have referred, are all mandatory for all the persons whom we are going to appoint as a director or shareholder in a company. Suppose Mr. X, whom we are going to appoint as a director in a company, doesn't have a PAN or Aadhaar, or doesn't have any of the 3 ID proofs mentioned, or doesn't have any of the any one of the 4 residential proof, and he doesn't have any email ID or mobile number, then first we need to initiate that process of getting the proof that are missing in this checklist. And only after that, after getting all these documents in hand, we can incorporate a company. So first step virtually is to acquire all these documents before applying a name, because after applying a name, there will be only, at present, the Ministry of Corporate Affairs gives only 20 days time. So first we need to apply for a name. The approval comes from the MCA. In the approval letter, MCA will be giving only 20 days, within which all these documents and details we need to gather and we need to upload in the portal and by affixing digital signature certificate. So if any of these proofs are not available, the first step is to get any of these proof for the persons who are not having this proof, and then we need to apply for name. So this is the first step virtually. The next one is, apart from these documents and details, drafting of MOA and AOA, which is called as Memorandum of Association and Articles of Association, as these are all called the bylaws of the company. Then consent of the directors, affidavit or declaration of the directors, disclosure of interest by directors in other entities, affidavit by professionals like CA, CS, CMA in practice or advocate in certain prescribed form need to be attached to. So that means apart from all the other details, drafting of MOA and AOA, there is a specific MOA and AOA model that is given by the Ministry of Corporate Affairs. So what is this MOA and AOA means? MOA and AOA contains the basic operating details. In MOA, what we'll be mentioning, what is the capital of the company, what is the registered office of the company, who are all the directors of the company, who are all the shareholders of the company, and what is the objects of the company. So all these key details will be mentioned in the AOA. And what is the AOA? All these key 5 details will be mentioning in the MOA, which is called as Memorandum of Association. The next comes the Articles of Association. Articles of Association means, like I already told you, what is the how frequently are the meetings conducted by the company, who can become a director in a company. That means any person who has a director identification number can become a director in a company. But additionally, you can clearly mention in this document, that only a qualified chartered accountant can become a director in my company, or a person who has a specific knowledge or experience in certain specific industries. Like for IAS, you should be having certain basic degrees and all those things. So something like that you can additionally mention. So only if they satisfy those additional conditions, they can become a director in a company, and you can regulate the type of meetings. So all those day-to-day operations, who can become a shareholder in a company, how the share capital of the company, that means assume the share capital of a company is 1 lakh rupees. and each share value is 10 rupees. So you will be giving 10,000 shares. Okay, so out that means your share should be 10 rupees and your total share capital should be 1 lakh rupees. So all those decision making, that how we are going to perform all those things will be mentioned in the AOA. So there is a specific format already given by the Ministry of Corporate Affairs for MOA and AOA. So there you need to just fill in the blanks. So in MOA, what is the register office? You can mention my register office is in Andhra Pradesh, and you can mention the district. So what is your share capital? So who are all the shareholders of the company? What is the brief object? So like that, there will be clauses. You need to fill in those clauses for MOA. And for AOA, there is already a certain specific standards, like what is the proceedings of the meeting, on what frequency the meetings can be conducted, who can be the chairman of the company, who can become the directors of the company. So all the key terms that are used in a company, for all those things regulating these decision makings and these terms, there is a certain specific document. So once you read the document, all the internal aspects of the company is regulated only by this AOA. And next one is consent of the directors. So obviously it is a simple format wherein the directors will be giving their consent, stating that I so and so person is interested in becoming a director of the company, and they will be furnishing the details like their name, their father's name, their address, their qualification, their PAN number, their date of birth. Along with that, disclosure of interest by directors in other entities. That means if they are already director or manager or managing director or shareholder in any other company, so that details to be disclosed. And then affidavit or declaration of the directors. That means what affidavit or declaration means? This is also a simple affidavit which is taken from the notary. But in present scenario, this affidavit is certified by professionals who are facilitating you in incorporating the company. So this affidavit is done by them. So this is a basic affidavit stating that you are not punished by any other act, and you are not qualified. You are only qualified. You are not disqualified for becoming a director of the company, and there is no case pending against you. There is no prosecution initiated by any other person on you. So so like that, the declaration will be given. So only if you are not prosecuted by any other person, or there's no pending case against you in any court, only then you will be eligible to become a director, even though you possess a director identification number. And the affidavit by professionals. So this key takeaway, that means a CA or CS or CMA affidavit is mandatorily required at the time of incorporation. So which means to say is that without a professional guidance and professional certification, a company cannot be incorporated. And then what is this? The additional thing is DIN, as we already know, director identification number. PAN means permanent allotment number, which is given by the income tax department for IT filing and all the finance related purposes. And then the next one is TAN, tax identification number. That means this TAN number is like PAN number, but there are certain milestones fixed by the government. That means if you are a businessman and if you have crossed a certain turnover, then you have to deduct tax from the payments which you are making to the vendors. So there are certain types of payments, and for each type of payment, there are amounts fixed. For example, you are having a toy manufacturing company. So once the toy is manufactured, you are going to sell it in the market. So instead of you directly going and selling it in the market, you can appoint a selling agent, wherein that person will go promote, market, and sell goods on behalf of the company. So for that person, you will be giving a sales commission. So that commission, if your business, but here we are talking about company. So once you have become a company, obtaining of TAN is mandatory. So you should be obtaining a TAN. So this TAN will be allotted along with the incorporation. So in incorporation stage itself, allotment of DIN, PAN, TAN, PF, and ESI are all happening during the incorporation stage. So with this TAN, what you're going to do is, when you are making a payment of commission to the selling agent, the basic slab fixed for paying commission is 10,000 rupees in a year. at present. So if you pay to Mr. X more than 10,000 rupees, then you need to deduct tax at certain percentage. Now at present it is 5%. That 5% tax you need to collect from that person when you are making the payment. Suppose you are going to pay 11,000 rupees to that person. So to as commission. So out of that 11,000 rupees, you need to deduct 5% as tax and then make the payment, balance payment to the commission agent. So that 5%, whatever you have collected, you need to file a return called TDS returns. So in that returns, you will be mentioning the PAN of the person, name of the person, then reason for which you have deducted the tax at source, and at what rate, what is the amount you have paid to him, what is the date you have paid to him, and what is the TDS deducted from that person. So that along with that details, you need to make the payment. Whatever you have collected, that 5% whatever collected, that you need to pay to the government and file a TDS returns. So this is additional compliances that is given to a company. So if you are a company, this commission is only an example. So there are so many payments like salary, then professional fees to lawyers, then professional fees paid to technical consultancy and supporting agencies, professional fees or audit fees paid to chartered accountants, and then payment made to contractors. So there are different categories, and rent, payment of rent to landlord, payment of commercial rent to landlord. So for these are different activities for which TDS is applicable, and there are different criteria. So if the payment exceeds this much amount, you need to deduct. So there are so many other compliances that are involved in this TAN. The next one is PAN, PF. PF is Provident Fund, and ESI is Employee State Insurance Corporation. That means PF and ESI, as you already know, people who are in employment, for them PF will be deducted, ESI will be deducted. ESI is an insurance, Employee State Insurance. And then PF is Provident Fund. That means these things will be registered along with the company incorporation. So now what is the implication is that the persons who are getting employed in your company, for those persons, you should mandatorily give a provision of PF. And you need to collect PF, and you have to give your contribution of PF. And then you need to file separate return for this PF against the employee numbers. So there will be a separate number called UAN number. So against each UAN number, you need to make the respective payment under these heads. Okay. So now we have fixed what is the type of business that you are going to do. Example, toy manufacturing. The next one is what is the type of organization that we are going to do this business. So that is the company. Okay. So now you have decided the type of business, you have decided the share capital, you have decided the name, you have decided the register office, you have decided who are all going to become the directors of the company, who are all going to become the shareholders of the company, what is going to be a registered office of the company, what is your address of godown, what is the address of your manufacturing unit. Everything is fixed. So now the company is incorporated. You have at the time of incorporation, you have got incorporation certificate stating that your company is incorporated with so and so name and so and so place on so and so date. Along with that, you will be getting the PAN allotment letter, then TAN allotment letter, then PF and ESI. So all these registrations will be done at the incorporation stage. So the next one is, okay, now company is incorporated, what is business, everything is selected. These are all the additional registrations apart from incorporating a company. These are the additional registration which is unique for all the type of business organization, whether it is a company or whether it is a proprietor, whether it is a partnership firm. Different types of organizations are there. So for all these different types of organization, based on the type of business you are going to do, these are all the additional registrations required. So whether these are all mandatory registrations? No. So these are all not mandatory registrations, but there are specific criteria specified under each of these acts. So each of these items are governed by different acts. So under these acts, Suppose, for example, first point is about GST registration. Okay, I have formed as a company. Whether immediately I need to get the registration under GST is no, because for getting registration under GST, there is a turnover limit. In case of goods per annum, if you cross 40 lakh rupees, and in case of services, if your annual turnover crosses 20 lakh rupees, then you need to mandatorily get the GST registration for your business. Whether you are doing that business as a company, or whether you are doing that business as a sole proprietorship, or whether you're doing that business as a partnership firm, and whatever type of business it may be, manufacturing of toys, or generation of power and electricity, or providing a legal consultancy services, whatever type of business it may be, or whatever type of business organization it may be, GST, if you look into GST registration, for if you qualify that criteria, then you need to mandatorily get registered under this GST registration. The next one is trademark, patent, copyright registration. As I already discussed, the trademark at the time of name approval. That means you are having a name and logo which you want to use it only unique. You should be using that logo and name, and no other person should be using that. So in that case, you can go for a trademark registration. So trademark registration has a separate authority, and there is a separate application, and there is a separate fee. There is a separate consultant who will be guiding you to register under this trademark, and the fees and the period for which you can use the trademark. And if after obtaining the trademark, any other person is using the same name and logo, then how to sue under the Trademark Act. All those things are governed by a separate act. So like for trademark, patent, copyright. So these are all different areas which requires registration if you want to go for it. The next one is Startup India. That means Department of Promotion of Industry and Internal Trade. So that is the department under which you'll be registering as a startup. So so whether proprietorship and partnership can be registered as a startup, the answer is no. So only a registered partnership, a limited liability partnership, and a company can only be registered under Startup India. So what is a Startup India? Means if you have an innovative product, a new innovative product. Suppose there is an existing toy, but you are making some innovation wherein the shape of the toy, or the price of the toy, or the features of the toy is getting changed. And if you have proven that it is an innovative product which is not existing in India, so then for those innovations, the department, under the Startup India scheme, the department is giving certain benefits. Like subsidy in power, then relaxation. If you're going for bank loan, there is a relaxation in the interest rate. Suppose for other people loan, they are charging 16%, so you will be given 14% as loan, something like that. Then when you are getting registration and trademark, the fees will be waived. So there are different types of benefits are given by the government under the startup scheme. Then there's a scheme called Udayam registration, MSME. So what is MSME means? For becoming an MSME, MSME means micro, small, medium enterprise. So based on your share capital and your investment in the companies are categorized as micro, small, and medium enterprises. So different criteria for categorizing under these three heads. So once you are falling under any of these three heads, then the benefits will be flowing accordingly. So if you are a micro enterprise or if you are a small enterprise, then there will be different set of benefits that are available for these types of organization. And next, then comes the professional tax registration. Professional tax registration means if you are doing any service industry or you have employed some professionals in your company. So for them, you need to get a professional tax registration certificate, and this is a local registration which is unique for specific states. So under that state, you need to obtain professional tax registration, and you have to comply. You need to additionally comply this compliance. And then FSSA or food license. Suppose your business is into food industry. So food industry means apart from registering as a company, you need to obtain an FSSA license or food license. So this is a separate authority. This also a state subject, wherein under these authorities you need to make a separate application and then obtain a specific license by paying a nominal fees and by producing the documents that are required for getting registered under this act. Again, for all these registrations, what we are discussing, there will be a separate consultant which will be available. And we are also providing all these kinds of consultation. So you can seek a professional guidance for all these regulations and consultation, and then you can get registered and comply with all these regulations. And then comes the trade license. Trade license also. So you need to understand the requirement whether for your business you need to obtain a trade license or not, and then you need to get registered. And the next one is MSME or Udayam registration and other business and industry specific registration. So that means these are all broad registrations, and there are certain also specific registrations which is unique for different types of organizations. Suppose if you are going to form as a mutual fund company or stockbroking company, then you need to register under a different authority. And if you are going to generate power, so then you need to register under different authority apart from registering under the Companies Act. And then if you are going to do any other form of unique organization like NBFC, for that there is a separate register of NBFC for each state. So under that registering authority, you need to register that business. So only then you can do this business. And apart from additionally guided by the Ministry of Corporate Affairs of India. So whatever act you're also getting registered. So that act simultaneously you have to follow. Like for companies, you need to file annual filing forms. Then you need to conduct meetings, maintain certain type of registers, maintain bookkeeping, and as I already told you, you need to maintain a copy of the books of accounts and all structured records in the registry office. So all these things are regulations under the Companies Act, since you are a company. Then if you are going to register the GST Act, then you need to follow what all the compliances that are unique and specific for the GST Act. That means monthly or quarterly filing of GST returns, payment of tax, issuing of invoices to the customers, then filing of annual returns. So all those things are additional registrations and compliances which will be unique for different types of businesses. Or if you have qualified that criteria, then you need to get registered under this act. So now I leave it open to the floor for any questions related to the topic that we have discussed today.
Any questions from the participants? So everybody there? So thank you, Ramesh Garu. That was wonderful session. So you have given the total details, including the minute details. So where if anyone wants to start a company, and if he wants to proceed in a legal way to incorporate it, so then if we note down the points what you said, I think this is enough. Okay, sir, I have a few questions, like one question. Like,
yes, so please.
In the participants' perception, I have one question.
Yes, sir.
See, they are the faculty members from engineering colleges.
Okay.
So if student teams, they have come with innovative idea. Okay, first thing. So do the faculty members directly should say that first you start a company and then work on the product or the prototype? Or they can work, then they can incorporate the company. This is one thing. The second point is, if they want to start a company, okay, so what kind of legal structure is the best suitable to the startup ecosystem so that they can reach out to the market? So if they apply for the IPRs, the process should be easy. and if they raise any investments, that should be very easy. So there should be some kind of legal entity, so where a lot of the investors will be interested in putting their money. Okay, so this is another question. So the other question is, so what kind of team composition do you suggest to the student teams? So if the faculty members has to guide them, like these are the three thoughts like I got to just give some kind of, you give some light on these thoughts.
Okay. Sure, sir. That's a great question, actually. The first one to be answered is that whether they should form a company and then they should start doing innovative ideas and they're developing a product or something like that, or they should first develop a product and then start a company and do it legally. The first thing to be asked in this question is whether the person is having a sufficient investment for doing that project or prototype. If suppose example, a person is coming up with a new inventive idea for manufacturing of a toy example. So for developing that new innovative idea, if in case he requires more investment, like around 5 lakhs or something, 10 lakhs or something like that, the first question is whether he can manage with that finance. If he can manage with that finance, then that is the best suitable method to make investment on his own and design a product and develop it. And then the next step is immediately to test the product, and then if it is proven, then the next step is go for a patent registration. Because once the patent is registered, then we can do it. We can incorporate a company, and then we can commercialize that idea, whatever they have designed. If in case the objective of the company itself is to do R&D in specific manufacturing sector, in that case, for initial investment, the student will be suffering. So if there are any finance related schemes that is provided by the incubation centers like AIC or something like that, then they can utilize that finance scheme. Or if in case all these options are ruled out, then the first step is to incorporate a company and then gather the investment and then proceed for performing the R&D, developing the innovative idea, getting it patented, and then the next step is to commercialize this idea.
I think that will suit to the experienced persons, I think. So if the student teams, like as whatever you said is absolutely right, sir. Like if they have a good enough amount and if they have their technology ready, like at least the proof of concept, then they can go ahead for the company registrations. That is absolutely right. So yeah, thank you. So sir, second question, please, sir.
Can you just repeat the second question, sir? Can you just repeat your second question? It is about the investment, right? Or the second question is what is the optimal form of organization, which is the suitable form of organization that they can choose?
Yes.
Like if it is a very nominal startup and investment is very less, I would always ask them to go for a proprietary form of organization. Okay, but if the aim is very big, that means the investment is big, the prototype is very big, and more or less, if it is definitely a manufacturing company, the investment will be more. So if in that case, and also considering the economic scalability in the market, that means if you are a proprietorship in the market and if you hold a company in the market, how the market approaches two different persons, a proprietor as well as a company, that also talks about it. Since a company has a separate legal entity and the investment can be raised in the future, and there will be so many persons like shareholders, directors, experienced persons. So considering all these things, and also main concept is the regulatory control which the company has. For a proprietorship concern or for a partnership concern, there is no separate regulatory authority which regulates all these things. But whereas in a case of a company, all the documents are made public in the Ministry of Corporate Affairs. So once you pay a nominal fees, you can download the past annual reports of the company, wherein you can gain the financial details and who are our management details, promoters, backup details. So all those things. So any investor, see, if I'm going to invest in a company or in any innovative idea, so obviously I would always be going for a company form of organizations, given all these kind of benefits like investments, regulatory authorities, then complete transparency in the board. So considering and the separate legal existence, so giving all these key benefits for students, I would always suggest for them to be incorporated as a company. But even if they are doing it as a proprietorship, that can also be scaled at a later stage to a company form of organizations. But if the aim is big, then right from day one, go for a company. So that is the key takeaway from this discussion. And the third one is you're talking about some structure, right? What is that, sir? Structure. That means capital. What size of capital that can be invested by the students and the faculty members, or something like that you were asking, sir? The last question.
No, I think you covered the 3 questions like in the first 2 answers itself.
Okay.
Yeah. So thank you, sir. Thank you very much. Yeah. So if any questions you have, you can use the chat box or you can unmute and talk to Ramesh Garu. Okay. Otherwise, we will close the session with vote of thanks. Yeah, thank you, Ramesh Addanki, for giving such a informative and elaborative session to the faculty members of our academic partners. I think they have got enough knowledge. So one of my submission here is please do share the slides if they are not copyrighted, and we will be sharing your session with the participants for their future purpose. Okay, thank you very much, Ramesh. And one more thing is, like, if any of the students from this cohort academic partners, if they want the compliance requirements, I'm going to connect them with you. Okay, yes. So with your permission. Okay.
Yes, sir. Sure.
Thank you very much.
For your information, as we have already signed an MOU, wherein we'll be the knowledge partners for you. Thank you so much for organizing such a wonderful session on this August day. And we are also feeling proud and honored to be associated with AIC and AIC SKU. For our continued support will always be there from our side to your team. Thank you.
Thank you, Ramesh Garu.
Thank you, sir.
So, and one more thing to the participants. See, we have assignments, right? So to develop the business model canvas, lean canvas model, and the incubator model canvas that we have shared already with you. So kindly go through those models. If you have any doubts or queries, you can contact me or Dr. Shivkiran. Okay. Otherwise, you can straight away go ahead and perform your assignments, and we will meet on the one-on-one sessions that assigned to you. Okay, that was scheduled to you. So thank you very much, one and all, for joining the session. Thank you all. Thank you, Ramesh Garu. We're looking forward to work with you.
Thank you, sir. Thank you, sir.
Thank you. Thank you very much. Thank you all.